right. Edgardo Goas. We're up. I think it's recording. Man, thank you so much for joining me here. I'm excited to get the chance to talk to you. I think, if I'm not wrong, right? I know we've talked a lot on the phone. I don't think we've ever met in person, but this is our first, like, if we could call face to face, right? Is that accurate? I don't think we've spoken like other than on the phone and lots of emails.
100%, 100% true. Yeah, that's
Yeah,
like on the phone,
I
emails, on the go.
you know it. Well, man, I'm so grateful for you coming here and letting us record this conversation. Can you tell like the viewers, people that might watch this, just like a little bit about yourself and the like your business, so that they can kind
Uh,
of have an idea what we're going to talk about. Obviously, we're going to talk about insurance and all those good things, but what should folks know about you when they're watching this?
yeah, Edgardo Goas, Puerto Rican, born and raised here. I went to school at Penn State. Played volleyball there for a while. After that, I jumped and played professional volleyball for almost a decade. And after that, I came back home, got my master's degrees in insurance. My dad has been in the business for his whole life, so I've been part of the business since I was born, pretty much. So after that, I put my roots here in Puerto Rico. Not much traveling like I used to, and just happy to and enjoying the business.
That's awesome. I wasn't aware. I knew about the Penn State volleyball, obviously, and like having won national championship there. From our company founder Andres Munard, who went. Well, he didn't go there, but he lived like in the same
Same
town.
college,
So
same
yeah,
college. Yeah, it's
yeah,
pretty
he
much
knew he knew about
university.
you before we even started with the insurance. So that was a kind of a cool connection. And then, man, I can't tell you like how happy like when a client asks me like as we're getting the process going, like,
Yeah,
okay, Nate, but who do we talk to about insurance? I'm like, you want to talk to Edgardo Goas and his team because like the folks just here in Puerto Rico, people just want, especially if somebody's coming from outside, but I see with a lot of locals too, that they just want to know that like they're going to talk to somebody who will be responsive, responsible, and be like honest and direct with them about whatever the topic is, but obviously with insurance when it comes to that too. And so I guess my question for you is like, we get, for our businesses too, we work with a lot of local folks, obviously looking for either a home or insurance for their home, but then also too, like folks that might be of Puerto Rican ancestry wanting to come back, or people that came to the island once and fell in love, and want to purchase here. What in general, like information would you offer people that are that are looking for an insurance quote, right? Like that's what they know. They found the place that they want. They need a quote. Like, is there any general information that you'd offer them? Like, what should they know at the very beginning?
I mean, at the beginning, it's all service. So everything is service, service, and service. So anything that they need, you need to either know it or find it or make them sure that we can accommodate whatever their needs are. What do they want to do? What do they want to do with that property? Do they want to live here? Do they want to just rent it out for long terms? Do they want to buy just a house, have cars? It's just you want to know as much as possible from the client, so you can service them as they want. The more information you get, the easier it typically goes, because you don't want to be every couple hours or every couple of days asking them for like, oh, I missed this information, I missed this other information. So the overview, you just want to make sure you know everything that they want, and you want to make sure you have all the data that you need to underwrite whatever they actually want. If it's a house, if it's an apartment, if it's a car, if it's a boat, whatever they want, you just gotta make sure you meet their expectations. But at the first most, a lot of communication and servicing.
I love that you emphasize the service part because like as a mortgage broker, like the first question that I get on the phone is, what do your rates look like? And I,
Yeah,
I, I make the analogy that that's like calling any restaurant and saying like, what do you have for dinner tonight for me? It's like depends on depends on you. It depends on what you like. If you're allergic to anything, or what your likes or dislikes are. I imagine it's similar like that for insurance, right? That people call you and the first question is, how much is the premium? Is that
how,
right?
how much is the premium? How much is it gonna cost? When are you gonna have it ready? And you don't even know if they are gonna have a house, an apartment, a condo, a shopping mall, a hotel. You don't know anything. There's no way you
Yeah,
can answer those questions
yeah,
without having the information.
exactly.
So the first thing they tell you when you're like studying all pretty much insurance, the background and how I've been taught since forever from my dad is you have your questions, so you have to analyze the risk, you gotta analyze the client to know how you can service them and do better. One of the first questions that I ask is just a simple, how do you like to communicate? Texting, email, phone call, and this is just basic stuff that if you know what they appreciate and prefer, maybe the communication is going to be better and the information is going to flow easier. So it's, yes, they ask for pricing, but you need to know a lot more about them and what they want to buy and insure before you can even get to like that portion.
100%. Yeah, 100%. I have to agree. And I tell folks often too, it's like the mortgage is a lot more than the interest rate. Insurance is going to be a lot more than the premium. It's about getting the right coverages that is going to be, right in your payment and all that information. But all of that comes after, like you said, like, making that relationship, getting that information at the front end. But in general, when it comes to like, insurance in Puerto Rico for a home. If we had like this, take the same home, put it in Puerto Rico, take the exact same identical copy and say put it in Florida or wherever else, is insurance for a home in Puerto Rico more expensive just because it's Puerto Rico?
It depends on where in Puerto Rico and where in Florida. When you're talking about a case, you need to where is the property? Is it oceanfront? Is it 1,000 feet from the water? Is it inland? Is it a flood zone? What type of construction do you have? What's the limit that you're looking for? All this information is going to lead you to know what company is made for that particular risk. There's some properties that maybe it could be of appetite for every insurance company, but there's some other properties and risks that maybe a lot of companies don't want to insure it. And right now we're in a hard market when it comes to insurance. I was just at a seminar right now, and the insurance business since 2017 has lost in general worldwide over $100 billion a year since 2017. And every year is a significant event. For example, Ian, Maria, Irma, these are significant windstorms that cause like heavy hits that affect pretty much the whole world when it comes to insurance. Because at the end of the day, you don't insure only Puerto Rico, you don't insure only Florida. All the insurance companies go to London, go to Munich Re. There's reinsurance all over the world, especially in Europe, that they sell the insurance to companies in Puerto Rico, in Florida, and obviously how they sell it and the pricing that they give and the underwriting that they give is tailor-made for that location and those risks. So as we said at the beginning, there's a lot of information that you need to know who is going to be tailor-made for. And that's the only way you can pretty much know about pricing, because it's all about cycles. And right now we're in a hard market, so it's a lot harder to get properties insured depending on where they are located. Obviously, we live in an island, which is significantly small compared to like other territories. So there's gonna be, it's windstorm season every year. So that's a risk that you're gonna have to take. It doesn't happen often, but earthquake is also a risk that is in Puerto Rico that you need to take into account. And obviously construction, at way many years ago, a lot of houses were wood construction. Now
I got a question about that because that's a very common question that like, I have a lot of clients that'll reach out to me like, hey, I found a property that I want to buy. It's got some wood part of the structure. Before I ask you about the wood stuff, I just wanted to ask like about your business. You're an insurance broker, correct? So like when we come to you, when we have a client that we send your way and we say, or anybody that comes to you says, okay, Edgardo, I'm looking for, insurance for X property. Are you able to shop it around and like look for and shop it, or is it just like do you have like specific vendor that you're going to go to for that?
No, there's two types. There's broker, and in Spanish it's called representante autorizado, which is representative of the particular company. And you sign a contract with X, Y, and Z company, and you can offer those type of policies to like all the clients pretty much. As a broker, you represent the client, and you can pretty much market to any company in Puerto Rico and market it. And that way you can actually have a bigger market and satisfy the client, which is at the end of the day what you want to do. Some people prefer to have do business with X, Y, and Z company, and they just sign exclusive with them. And then some other people want to be just brokers, have an pretty much open for business for any company and look for the best premium, the best coverages for the client. And in my case, we're insurance broker. Any client that comes to our office, we can pretty much go to any company and ask and market the risk, request a quote, talk to any of them.
That's cool. That's great to know. So yeah, that's awesome. Because one of the, and to come back to the wood question,
Yeah.
because that's like such a common thing. My default answer, oftentimes when a client asks me like, Nate, I want to buy a property that's made out of wood, I'm usually like, well, the issue's not with financing, the issue's with insurance. And I point at you guys. So I say,
Yeah.
I like pass the responsibility, but like, because like honestly, like according to the guidelines, because like the lenders that we work with with collab lending is we're not a bank either. Like we're brokers as well. And so we're able to like shop with different lenders. And like there's no guidelines for loan programs that says that you can't put a loan on a wooden structure.
Yeah.
And my understanding has been that the issue is typically on the insurance side. Is the problem like specifically, is it that they won't insure it or that the premiums just tend to be too high, or like can you talk a bit about the wooden structure problem?
Yeah, the wooden structure is not a problem that just beforehand, yes, you can insure it. And there's cases that you can insure wooden properties. But let's go back to like a cycle. We're in the hard market right now. When Maria happened in 2017, many wooden properties were like crushed. They were like big claims when it came to that. The experience shows that wooden structure, when a big Hurricane 5, which was Hurricane Maria, they get damaged badly. So what happens? Let's go back to reinsurance. Reinsurance is what insurance companies in Puerto Rico buy. After Maria, when they buy that, reinsurance property paid billions of dollars for all the damages that happened. And when they look at their data, wooden construction was more affected than concrete construction. Not saying that some lasted and they're still in perfect condition, but as a whole, they were more affected. So when they sign their treaties every year for their portfolio, pretty much, they can exclude stuff. Their guidelines could be different. We need appraisals. We need pictures. We need only concrete. We need no ocean front. So depending on the guidelines that the company pretty much negotiates and does for that particular treaty that they do for the year, then that's what they can offer to their clients. So as broker, let's say pre-Maria, which was 2017, if we would go 2016, we could go to any company with a wooden construction house and market it, and we could probably get quotes from every company in Puerto Rico. But as time goes on, and we're currently in a hard market, their guidelines for underwriting get stricter and stricter. So since the data shows that they were damaged, and as any business, if they're in red in this portion, they'll exclude those coverages. Their underwriting gets stricter. We don't want to do ocean front. Other companies want to do ocean front. We're not going to do wooden construction. So all those factors are key information that are going to help you know if you can insure it or not insure it. And in regards to wooden structure, since we're right now in a hard market, we had Hurricane Maria, we had a bit of Irma, so it hasn't been a soft market. We continue to just, the past 4 years have been rough for the insurance industry, especially for Puerto Rico, which is in a windstorm area that is not like other parts of the state that the worst that could happen could be X, Y, and Z. But here for a fact that you're gonna have windstorm. So the guidelines for underwriting have been a bit stricter over the recent times, that it's harder to pretty much insure wooden properties at the moment.
Okay. Well, we kind of come back. It sounds like we come back to the same type of idea. It's like to be able to determine if like what a premium is going to be, or if a wooden property is insurable, it's going to require information on your part. Like, what information might you need from someone in order to be able to determine if it's going to be insurable or not? Do you need a full appraisal for a wooden structure property, or is there like a lower bar of information that you could accept to try to find a quote for that?
Insurance has 4 key factors, and it goes the acronyms COPE. construction, occupancy, protection, and exposure. COPE. Construction, you got to analyze that portion. If it's really good construction property, it could be more appealing for insurance companies to quote it. Occupancy, is it going to be a primary residence for somebody who's going to take care of that property better than, for example, a short-term rental, or any rental is not going to take care of a property like it's your home. So what's going to be the occupancy? What are the protections that you have for that particular property? In pertains to windstorm and all the risks that Puerto Rico has. And then obviously exposure is everything, every factor that can happen in that particular location that you have that property that could affect that risk. So once you have those four things pretty much set, then you go for the appraisal. That usually has all that information that we're talking about. You don't need an appraisal to get an insurance company, insurance quote, but you would need a lot of information that can sell the risk to a particular insurance company. If you don't have an appraisal, but let's say you have a risk, you know the square footage of the risk, you know the construction that it has, you have an idea of how much it's going to take to make a construction. For example, a hotel, SYNC hotel, per square construction could be $200, $250. So you multiply that by the square footage, and you can get an idea of what's going to be the construction cost of that property, and how people in the industry call it replacement cost value of the property that you need to insure. The appraisal typically has that number, the replacement cost value of the property. But if you don't have it and you study the risk and look for all the data that you need to be able to insure it, there's ways that you don't need an appraisal. Square footage, type of construction, an idea of how much it's going to take to construct that property, pictures of the property. There's other stuff that maybe you could go around it, but there's no way you could go to a company and say, insure this property that's behind me for $300,000. And they're like, how do you come up with that? When actually, when it's a 5-story, that's going to be typically $2-3 million, because this is the square footage of it and all that stuff. Because the problem is not going to happen when you insure it. You need to give the information to the insurance company, and sometimes, yeah, you can get away with getting any insurance company at some point, which is not how we do business. Because when the claim happens and you have an adjuster that goes to the property, and there's a thing that's called co-insurance penalty. If you're insuring a property for, let's say, $500,000, but the actual cost of replacement cost is $1 million, and when you have a claim, the adjuster is going to go there and be like, this is not insured correctly. You're insuring 50% of this whole thing.
It's like not even sufficiently insured. Okay.
Sufficiently insured. So I'm not going to pay your claim in full. If you have $500,000 limit and the property is actually $1 million, for example, and you think that if you get any claim up to $500, you're going to get paid. That's not how it works. You need to insure the property close to the 100%, so you don't get a co-insurance penalty. And then if for some reason you incorrectly insure it and you have to pay a claim in regards, they're going to pay you in proportion to what you were insured at that time. And it happens, many adjusters do that when they see limits for properties that are not correct. So going back to your point about having an appraisal and having banks involved in between, that's why when you finance something, they want an appraisal. They want to know how much is the limit, because the bank interest is to make sure that property is correctly insured. So if something happened, they can actually pay it and continue to pay their payments, their monthly payments. The tenant or whoever is living in there could just continue living there. So having the correct limits is a key part, which appraisals will have it, but there's other ways to actually come up with the correct limit for a property.
Okay, cool. I mean, that's good to know that it doesn't always take like a full appraisal. Obviously, like when we're working, usually like we have that information or it's on its way. And I can remember times where, we got an appraisal report and it either was missing the replacement cost information, or that like it was way low. It was like way lower to build it new than it was, and we've had that gap issue. So, but I know we've been able to also work through those things. So that's also good for folks to know. The next question I wanted to ask you about is like, probably for me is like one of the biggest challenges is to understand and also to like get enough information to you so that we can work together to get people to the closing table is for condominiums, which is
Yeah,
like the insurance for condos is like I don't know why. For me, even like working in the industry, sometimes it's complex. But like I'll say what I understand, and you tell me what's wrong and what maybe more you can add. But like my understanding is when someone wants to buy an apartment, like cierto, porque en español siempre se llama un apartamento, but like if we're talking about it, it's like a condominium unit in a condominium complex. That there's the homeowner's insurance covers the inside, right? Then there should be master policy insurance that covers all of like the common space stuff, which that might be rolled into their homeowners association payment per month, or it might be paid separately. And that whenever we're like helping somebody purchase a condominium to estimate all those different insurances and figure out how they fit together, to me sometimes makes my head spin. So can you talk a bit about like, is that correct? Is that there's like the homeowner's insurance for the inside, and then there's the master policy for all the common stuff, and that
mm,
these things can how they can be structured sometimes?
yeah. Master policies for a condominium, there's two types. There's full value and there's bare wall. Full value includes the common areas, everything around the condo and the inside of the apartment, which is not your personal content, not your TV and your sofas.
Okay.
When you walk into an apartment, you have your kitchen that is already attached to the property. You have your bathroom, you have your toilet seats, you have your doors in your rooms. All that stuff is already included, attached to the main structure. So that portion in a full value master policy, it's included in one policy, which is the master policy. And in theory, if you don't have any betterments to that property, if you want to buy a property, a condo, and you have a master policy that is full value, you're already paying for the whole thing in the master policy. If you have a bare wall policy, they exclude everything that is inside the apartment attached to the main building. So the kitchen is excluded, the bathroom are excluded, the doors are excluded. All that stuff is excluded from the master policy. That's why it's called bare wall. Common area and pretty much the main skeleton of the condo, but excluding whatever is inside. And then you need to get a separate policy for that particular limit. And between those two policies, you insure 100% of the property, and that's what you need for a closing when it comes to a condo.
Got you. Thank you. I mean, so I more or less did have it pretty much right. I wasn't aware, like I've heard these terms before, like bare wall or full coverage, but I was always thinking that like when people said bare wall, for some reason I thought that meant their internal unit coverage, but no, it's like a type.
Opposite. Yeah.
It's opposite. It's like type of the master policy insurance.
Yeah,
Is that
it's
better? Okay.
when you do a condo, it's either full value and bare wall. And when you do the appraisal of a full condo, in our case, when we have one in the office, you do an appraisal for the whole building and they give you both values. They give you the full value, which includes the interior of every apartment. For example, a condo is worth 20 million full value and bare wall is going to be 15 million. That's excluding a 5 million difference, which is a portion of every apartment, the inside, you exclude it from that main master policy to make it a bare wall policy. And those 5 million are pretty much in every apartment that you have in the condo. And if you have a bare wall in that case, every title holder needs to get a separate policy for that little portion of their apartment to insure the whole property. And when it comes to a closing with a bank, you need to have the 100% of it.
Got it. Got it. That clarifies a lot. I think that like that'll help a lot of folks. I think I'll once this is done and the final edit is posted, like I'm gonna make a link in the description just to like that explanation because I think that'll save so many people like the headache of trying to like figure it out and what am I like it's just hard for folks sometimes like they want to buy it, they want to understand the pieces so that it makes sense and they can get it to close. But no, it's for some reason like condo insurance has just seemed like kind of complex.
Yeah, because getting that information sometimes is a bit tough because you need to work with the administrator, maybe the broker that has the condominium. You need to get the limit that is inside the apartment because there's an appraisal that has that information. You need to get the policy for the master policy. So there's a lot of moving things that you need. That is not just getting an appraisal like a house. which has the limit, and you can go ahead and market that and try to get insurance. So there's a lot of moving parts. And going back to servicing, not every office that you call, they're gonna answer the phone, they're gonna give you the information like right away. So all that stuff delays it quite a bit.
Definitely. Yeah, 100%. Like just getting that information from the condo sometimes can be challenging. Like I just had a client like that we're working together with her, and it's taken us so long just to get that back and forth and back and forth. Finally, we got it approved. But the other big question I had, and I'm grateful for your time. I know that it's that it's limited here. But that the other big question is about flood insurance. Can you talk a little bit about kind of how that works? Like do buyers, I think I know the answer to this, but do buyers need to go look for flood insurance on their own? And or like let's say that they're buying a property and then come to find out it isn't a flood zone. Do they need to go to FEMA for that? Or could they just come to you and be like a one-stop shop for that?
Yeah, so flood insurance is a bit complicated in Puerto Rico in the sense that there's two ways to get it. There's a federal program uh, that is called FEMA that pretty much has the full flood program in Puerto Rico. So almost everyone goes through FEMA and gets to the federal program, but every company can work through them, or almost all of them can work through them. So when you need flood insurance, which is a separate policy from the ones that we have talked about, because it's a different risk just for that, with different underwriting, different information that they need to be able to underwrite it. So you go through the federal program to get insurance for flood, but also some companies, depending on the risk, if they see it's a good risk, they can also self insure that flood coverage as well. So what happens is when there's a flood zone, they typically go for the FEMA federal program that they have and get insurance through there. But if it's a non-flood zone and the customer still wants to get flood insurance, they have the capacity, if they have it on their treaties, to insure flood, to do it that way. But since we're in Puerto Rico, it's a small island, there's a lot of places that are flood zones, and typically everything goes through the federal program when it comes to flood.
Gotcha.
And depending on where the location is, they're pretty hardcore with information for the underwriting, because depending on where it is, the premiums could be significantly higher or lower depending on where it is. And going back to the scope, the construction, occupancy, and all that stuff. Occupancy is a big it changes the premium when it comes to flood. For example, if you're renting the property, that's an extra $200 or $300 immediately just because it's rented and it's not your primary residence. So
when you I see. So you mean like if I'm the homeowner, but I'm gonna put the property to rent, then right there, the fact that I'm gonna be renting it out and not occupying it myself, the premium would be higher because it's more risk to the insurer.
Typically, and in cases we're talking about regular standard homes, it typically goes like two something, 250 additionally, just because it's rented. Yeah.
Oh, really? Okay. So the occupancy, similar to like with a mortgage, that the occupancy is like one of the main factors. So that tells me then that you probably get some folks that might try to say, yeah, I'm definitely gonna live in it. Yeah, I'm definitely gonna like live in the property, right? And then maybe they're not actually going to be occupying it. Do you guys face that same challenge? Because we get the same thing with folks calling me to be like, yeah, I'm going to live in it. And then their first intention right after closing is to rent it out, which is obviously occupancy fraud and it's illegal. But do you see the same thing?
Yeah, 100%. And you see clients sometimes coming to you, oh, the insurance company never paid me, all this stuff. And then when you look at the information, it's like you're short-term rental in this property, and that company doesn't even have a treaty that can insure short-term rental. And the data is everywhere. You can find if a house is being rented, you can find if something is being short-term rental pretty easy. Like you could go to Airbnb and Zillow and all the other applications and right away know if that property that you're gonna visit for a claim, what are they doing with it? Is it a primary residence? If it's and it's easy to find the information. In regards to our office, we want to do the things right. We don't want to have a headache when it comes to a claim later on because you try to lie to a company about I didn't know who
Not
was
worth it. Not worth it.
It's not worth it. You want to do good for the client and the company. You don't want to be lying when it comes to that stuff. So in our cases, in the service that we do, we don't want to do business like that. So we want to make sure we have the information correct. So we can actually insure the risk as it's supposed to be. So when something happens, they get paid for their damages, and you're not living in that gray area that it can lead to bad things.
100%. No, I couldn't agree more. To circle back on flood insurance, is that because like there's I've seen the FEMA flood map, right?
Yeah.
Like people ask me for, they'll call in, I'm interested in this property. Is it going to have flood insurance? And it's like, well, let's pull that up. Is that a pretty accurate resource? Is that actually something that you guys use, or like when you get like an address for a property, is that you just plug that into a database and you know right away if it needs flood insurance? Like how can folks like more quickly identify if a subject property might require flood insurance?
That changes frequently because flood zones change as pretty much nature changes. So you need to know the catastrophe territory that it has in the appraisal. And if you see a form, it doesn't have that much information that you need, but most of it is where it's located. So they can actually put it in their system. We can't do that. The underwriters for the insurance company type it in, and depending on the locations they put, the premium comes up for their underwriting team. So it's tough for us to give a flood quote because we don't have the data and the system that pretty much FEMA has in regards to that stuff. My toddler is trying to get in.
That's cool.
Sí. Le dice adiós.
Big guy. How old is he?
He's 2.5. He's gonna be big.
Oh, he's gonna be big. He's gonna be big, like his dad.
Yeah.
Dude,
Yeah, I'm
how are
6'5".
you?
My wife is 5'9", so hopefully he's big.
What position were you when you played volleyball?
Setter. I was a setter at Penn State. When I was younger, you play everything because you're the tall guy. But once you go to like higher levels, 6'5" is short, pretty much. Yeah.
It's wild. Yeah, I mean, I can only imagine. I topped out at about 5'8". And so it was like I had dreams of playing in, basketball and
Yeah.
my brother's like my brother loves to play volleyball. He's a little taller than me, but we're not six, we're six, not even six. So
Yeah.
but okay. Curveball insurance question for you
Yeah.
related to volleyball. If you were going to offer an insurance for volleyball player body parts, which
Yeah.
body part on a volleyball player would you charge the highest premium for?
It's funny that you mentioned that because it's gonna depend what position they play. When it comes to a house that you need all the information, like
Yeah.
for example, I was a setter. Setters have it easy because they're not like hitting away, they're not jumping. You're just setting, and the career for a setter is longer than, for example, for a middle or an outside hitter or a blocker that are just like pounding away. So when it comes to body damage, I think for middle blockers, their bodies take the toll. They're the biggest
All right.
persons. They jump, and so
They're sticking their hands in front of it all the time and
yeah,
breaking. I've seen
fingers
their
and all
fingers
that
on
stuff.
those guys and they
Yeah.
get a little beat up. Yeah.
So if we're talking about knees, shoulders, and hands, man, when it comes to blocking, you can see some crazy stuff. People hitting the ball really, really hard, full velocity. People break fingers more often than not when it comes to
I've
volleyball.
heard that. I've heard
Yeah.
that. I've heard that. But and are you currently playing pro as well?
So I used to play like full-time volleyball. I went overseas and I was like pretty much the whole year playing like morning. My life was volleyball. But now I played last year for the Puerto Rico League just for fun. It's a 4-month league, and I played here. So I'm still trying to debate if I want to continue to do that
Okay.
or call it quits because business is the main issue here.
Oh
I
yes.
I want to have the time to enjoy family and all that stuff.
100%. And speaking of which, you got one on the way. I remember you told
Yeah,
me
yeah.
that like in a couple of weeks, the business
Yeah,
might even be more
good.
important.
Not even 4 weeks. Give me a second.
Sure, sure.
Now he knows we're being recorded, so now he wants to
Yeah.
come in. The
Right,
whole
of course. No, I'm surprised I haven't had visitors yet myself. They can't be far away. I'd asked you like which body part would you charge the highest premium for if you were going to insure the body parts of volleyball players? And And true to form, it depends. It depends on more information. Like
It depends.
what's their position? Like how hard do they play? All those things. It's just like regular insurance. You're very
It's
consistent. I
just
love
like
it.
regular insurance.
Yeah.
If I was a company and I had to insure volleyball players, I would want to insure setters and liberos. They
Totally.
jump the lease. It's just like insurance. If you want to have the least risk, you want to stay away from water. You want to stay away from that. So when it comes to volleyball, you want to stay from the people that are actually just jumping like crazy and hitting hard and all that
Yeah.
stuff. So
Beautiful.
not
I love that.
actually a body part, but actually the players. I would do the underwriting when it comes to that a little different.
Got it. So that's how you're gonna hone in more on position than just like body part.
Yeah,
Well,
it's like football, for example. Running backs, linebackers, they take the hits. Like
yeah.
quarterbacks, they last longer because the risk is least to get hit. So the same thing happens with insurance. It's pretty much risk management that you have to do when it comes to insurance. So you gotta look at the data and know when something is bad, you need to let the client know the data is not good for X, Y, and Z. So you need to make sure you have this cover, not insurance related, but you need to manage it one way or another. So you don't get that exposure and then get a claim that it's gonna affect you in the long run.
No, that's great info. I mean, I guess my only other question is just really a very general one for you, Edgardo, is like when someone is considering merchant a price, or I mean, I guess let me back up. Like, it's not just when someone needs to like purchase a purchase a home. What can you offer? Like what other types of insurance do you work in? And if it's not just for purchasing a home and originating a brand new policy for a home, do you do other types of insurance as well that folks could look for,
Yeah,
could reach out to you for?
yeah, business, commercial, operations, liability, cars, boats, uh, even if you want to fly, there's insurance for flying. If your flight gets canceled, if you get sick, life insurance, you name it.
So you do it
Anything,
all.
we try to do it all, and we wanna do well for the client. So we wanna make sure if we can treat you well and we're we can meet your expectations, we're gonna take you on and do everything possible to do that service. But we pretty much do it all.
That's awesome. Well, Edgardo, like I said, I know your time is very precious. I really appreciate you taking a moment here to meet with me and let me record you. I'll be putting this up here as soon as I can. I'll send it to you here so you have the green light on the first cut. But Edgardo Goas, thank you so much, man. Really appreciate it. I'll have your contact information will be in the description of this video so that people can reach directly out to you. But obviously, folks, if anybody watching this, has questions about, purchasing a home, getting it insured, what might be needed, or any the other types of insurance that Edgardo could help with, look in the description. That's where you'll find our contact information. But sir, thank you so much for your time. Good luck with the new arrival coming. And I would love to see you play some volleyball, man. I would. So maybe if you
Yeah,
decide to continue playing,
yeah,
let me know because I'm always looking for cool outings, different stuff to show my kids, and go see something different. It'd be cool to see somebody that I know kind of like playing would be really cool. But thank you, man.
yeah.
Really appreciate you.
Definitely. If you don't see me professionally, we can plan a trip at Penn State with Andres and we go to alumni weekend and have some fun there. And
Oh,
there's
that
fun there as well. So
that would be cool. That would be
a
cool.
pleasure to be here. And as I say, insurance is a complicated topic that it changes over time. So we're here to service anyone and help anyone in any regards, pretty much. So
Thank
it
you.
was an honor, Nate.
Thank you. I can vouch, man. Like everybody that we send back to you or send to you comes back to us telling just like how great the service is, how happy they are with the service, with the premiums, with the communication level. So, man, keep up the great work, and it's just a pleasure to work with you. So, thanks again, man.
Thank you. Thank you. Have a good day, man.
You too.